time for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts, and here to take us through the trades, we've got Jason Brown, stock market expert at thebrownreport.com and author of 5-Year Millionaire. It's great to see both of you. All right, Jason, let's start out with the first one on your list. You've got Walmart in a focus. I've seen that on some other people's lists, but tell us your thesis behind this one.
Yeah, thanks for having me on. What I like about Walmart from a fundamental standpoint is they're in consumer staples. They also have a hand into the e-commerce platform. So not only do they sell their own products, but they become more of an eBay or Amazon marketplace for others. And then also Walmart has huge pricing power. And so when it comes to tariffs and different things like that, they can pass that price on to their their partners that do business with them, so they can really minimize the hit. From a technical standpoint, the stock is pulled back, and it's really building a nice base right around the $84 range. And if you look at the year-over-year comparison, if you go back to March of 2023 and you come forward to March, roughly a little bit before March of this year, the stock returned 66% just from a simple buy and hold. And so I'm looking at the option, I believe, with the pullback. If we can go out a year from now, low cost of $1,465 per contract, you have the potential for 100% return.
Okay, all right. So this is a bullish play right here. I'll come back to you for a follow-up thought on that, Jason. I want to, Rick, send the floor over to you. Talk to us about the chart for Walmart. I know it's had, like Jason pointed out, it's really performed well if you look at it, especially on a longer-term basis. But what are you paying attention to when it comes to the technicals here?
Right. I believe Jason mentioned that level near 84. And if you were to look back on our chart here, you can see that this green line here is actually 84.85. That's the high point that we saw before we had our earnings gap to the upside that took us into our 52-week highs. We did retreat from that level, but that green horizontal line, for the most part, held up. We did have a bit of a dip below, and things really started getting crazy earlier in the week, but we held on near our purple 252-day EMA. Now, actually, we have broken out to the upside from this shorter-term range in which we've been trading that also matches up with this series of lows here, giving us our red line at 90. We've broken above all three of our moving averages in rapid succession that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. For now, we're holding on. The moving averages are starting to tilt upward instead of downward, a sign of trend change. RSI is also crossing above the 50 midline as well, suggesting a shift from bearish to bullish momentum. If we were to add our other studies that we follow, volume profile and standard deviation channels, we can see that there's a good deal of volume around 93 to 94 or so. This could be a resistance point to watch. And then these highs right here, 100, that would be the area the bulls would want to take out ultimately. And then to the downside, our green line, once again, 84, 85, around that area.
Okay, Jason, I'll cede the floor back to you. Any final thoughts on Walmart before we move on to your next trade?
No, I think the technical analysis was spot on, and I would encourage traders and investors alike to think about the long-term play, which is why we're looking at options that go out just short of a year on this Walmart trade.
Okay, all right, so let's move on to your next trade. You've got Tesla on your list. I think this is a very different story. Shares under some pressure today. How are you approaching this one, and what are your views on Tesla?
Yeah, so the Tesla trade for me is more of a yield play. I see the opportunity to pick up about 6.5% yield in 7 days. And so Tesla double bottomed at 222, which means it hit support, bounced, came back down, hit support again. And so I believe that is going to be the floor, at least for the next week, because they report earnings April 22nd. And so I don't want to be in this trade over earnings, which means there's no new news that I see coming out that's going to take the stock down before now and next week. So I'm looking at this as a bull put spread. So I'm looking at selling the April 17th 225 strike price put, and then buying the April 17th 215 put, and getting that credit spread of about 65 cents or $65 a contract. It's going to cost you roughly $1,000. I know that number's been fluctuating since the market has been open, but that allows you about a 6.5% return with no news coming out and a double bottom in. I think it'll hold at least from now to next week, and you get that 6.5% return.
Okay, all right, Rick, I'm going to send it over to you. Tell us about what the chart looks like. I know it's been difficult this year, but if you zoom out, you know, it could be a different picture. So what does the chart tell you, Rick?
Yeah, so our green line here, this represents kind of the low areas that we established from earlier back in the year. We kind of hit it around there. We never really touched it again. And if you were to fast forward a bit here, this is the double bottom area that Jason was discussing, near about 222, those lows. So we actually stayed above those previous lows during our last two most serious declines here. So that's kind of a intriguing idea here that we held on to this long-term support. And for the most part, I think you could also argue that our long-term trend line, our blue line here going across all these lows, mostly has held up as well. We did have a bit of a intraday dips below it, but we are holding on. We have not broken out to the upside, though. Unlike our last chart, we have our downward sloping channel here in white. We are stalling out at the confluence of the channel and the yellow 21-day exponential moving average near about 259, 260 or so. So now this gives us kind of this triangular type shape to consider. Decreasing volatility, an increasingly narrowing range for prices trading in is often a prime situation for breakouts potentially here. So if we were to look at our other studies here, the volume profile point of control, the area of heaviest trading, right about where we are now, pretty close, so around 252, a key area to overcome. 290, the highs from around here, would get us also through several sources of resistance, our moving averages, standard deviation channels, etc. To the downside, though, our green line, 208, that would be a key area to beat. 220, also heavy volume in that area.
Okay, Jason, I want to go back to you, especially, you know, it seems like that your approach with this one is very technical in nature, given the double bottom. Does this account for any kind of headline risk and headline volatility?
Yeah, well, when you think about it, we already had the headline risk of the tariffs that came out. We also just heard President Trump come out with a 90-day pause on tariffs. So I don't think there's going to be any new news on the tariff front that's going to take the stock down. And then again, earnings is going to be after that option expires. So we want to be out before earnings because that can totally throw a wrench in this trade and send the stock down big or up big. Obviously, if it goes up, we still get to keep the credit spread that came in. But I don't think there's any news that's going to move it up or down too much between now and earnings. Even if it does, there's also about a 20-point drop baked in from where the stock is at now, and you still would be at roughly break even.
Okay, so there's some say risk-defined optionality in this
Cushion.
one. All right, so cushion, there we go. That's the word I'm looking for. So, Jason, let's take a look at your final trade. You've got Amazon in focus today. I've seen others appreciate this one, especially in this, you know, heavy tariff environment. But tell us your thesis behind this one and your approach.
Yeah, so Amazon is 33% off from its highs. You can look, I got my charts up here, about the 160 level is support on this stock going way back. You got to think that they're in the areas that you want to be in. They're in e-commerce. They're the biggest e-commerce platform out here. So they also have a little bit of pricing power. They know how to do 1 or 2 day distribution. They're also in the subscription-based business. And this is what people got to understand. Yes, there's tariffs here. Yes, there is a little bit of uncertainty in the market. But companies like Amazon, Walmart, Apple, they have a subscription-based service built in. And so it's not like everybody went out and canceled their Amazon Prime in the last, 72 hours to 2 weeks because of tariffs. So they still have a baseline of revenue. They're playing in the AI space as well with servers and also working on building their own chips. So I think there's a lot of upside momentum from Amazon. I think it just got caught up in all the tariff headlines. At 170 to 160, you want to be an owner of the stock long term. It's not going out of business. It's just a matter of time before it returns to its glory prices.
Okay, all right. And then, Rick, take us through what the technicals look like for Amazon.
So like so many stocks, we've seen a decline from the 52-week highs. A lot of them were around this early February, late January time period. From there, we formed our downward channel that took us below our moving averages. We are still below all three of them, but we've seen such tremendous volatility recently, such huge swings. We're still a good bit below them, but we are approaching our yellow 21-day EMA once again near 189. So we had a downward sloping channel in which price traded kind of in this area right here, and we had our downward sloping trend line. You could duplicate it, put it across these lows. It matched up decently here and gave us a fairly good projection for where to think about looking for potential support down here near that level around 160 or so. You could also duplicate it again. Happens to match up pretty well with this series of highs here. So now we have another area to consider. Our trend line, our downward sloping blue trend line, matches up very closely with that 21-day EMA. So if we start to push above 190, it could be another breakout type situation. However, we'd still have to take out those recent relative highs from here near about 206. That would be one area to watch. Notice the very, very heavy volume recently on this stock, big volume spikes. RSI also showed a little bit of bullish divergence. The RSI did not make a lower close even as price did here. So we broke above our red trend line as well. Finally, if we were to look at our standard deviation channels and volume profile study, point of control right about here, 188 or so, a key area to overtake to the upside here. And then we would have another node just above our -1 standard deviation channel near about 200.
Okay, all right, Jason, I'm going to give the floor back to you. Final thought on Amazon and your approach here.
Yeah, so the trade here is, I think you sell the 170 strike price, May 9th expiration. You bring in about $7.85. Stock's trading at 179. So you have a $9 cushion if the stock falls. If it does fall, the worst thing that happens is you're forced to buy a good company at a price that we want to own it at anyway, which is close to support. But you also have that $7 and roughly 80-cent cushion. So it actually could fall $9, then fall another $7.80, and you still would be at break even. But again, it's a company that you want to own. So basically, you're either going to get paid to own it, or you're going to get paid for trying to own it at a price that you'd want to buy it at anyway. So I like it right here, right now with the cash secured put.
Okay, and I like your point that you made is not going out of business. I still have my Prime account. All right, that's Jason Brown, thebrownreport.com, and Rick Ducat, lead market technician, who I also call the Duke of Data. Thank you both.